This is the Paper Millionaire, where we are wanting to turn 100K into $10 million. No experts, just passionate independents testing a theory. We're not quite at week 2, but we were excited to share some info. First, let's talk the portfolio. Currently it is in the red. Of course, I don't want to start off in the red, but we're honest about the trades here. Nobody builds a disciplined portfolio and expects the first 2 weeks to be a straight line up. The market doesn't care about your timeline, it cares about its own. So here's where we actually stand, and more importantly, here's what the data is telling us about what comes next. Here's the full picture. 5,000 shares of JFB entered at $5.57, currently trading at $5.25, down $1,600. We've got 500 shares of unusual machines entered at $26.70, currently at $22.85, down $19.25. Rounding out the drones play here, we've got 50 shares of AeroVironment Inc. entered at $185.92, currently at $172.93, down $6.50. For the more balanced side of things, I bought 30 shares of Berkshire Hathaway B at $488.13, dead flat. 215 shares of Realty Income Corporation at $60.84 entry, currently at $62.11, up $273. 100 shares of Coca-Cola at $79.48, currently at $83.59, up $4.11. And we still have some cash on hand, about $13,792. The headline: the portfolio is down about $3,500 from where we started. 3 positions in the red, 2 in the green, 1 flat. The drone plays are carrying the weight. UMAC down 14.5% is the biggest hole. AeroVironment is down 7, which we'll get to. The income anchors are doing exactly what they're supposed to do. Coca-Cola up 5%, Realty Income Corporation up 2, quietly compounding while everything else is noisy. Our Berkshire.B shares are sitting at 0, which is Berkshire being Berkshire, exactly as expected. The story this week is the 2 names that aren't behaving yet. We ran both JFB and Unusual Machines through Hound Trader's AI analysis engine this week, full advanced analysis, extensive data depth, and the results deserve a real conversation because they are not what most people would expect from 2 positions that are currently in the red. Let's start with Unusual Machines, or UMAC for short. Unusual Machines is sitting at $22.85 as of this recording. We are down about 15% from entry. By every short-term metric, that looks like a bad trade. But here's what the AI sees. Hound Trader's consensus signal on UMAC is buy. Confidence at 51%. Model agreement across the 4 AI models is strong. 3 of the 4 come back with a buy signal. The only holdout is Bulldog, which is the risk management model, sitting at hold with 50% confidence. That is not a red flag. That is exactly what a risk management model is supposed to do when annualized volatility is running at 183%. It is being appropriately cautious with a volatile asset. The 30-day predicted move on UMAC is plus 31.67%. The 90-day predicted move is plus 54.85. The 1-year projection is plus 110%. Now, nobody should treat those numbers as guarantees. They are model outputs, not promises. But they are telling us that the model sees upside potential from here that is meaningful. The market regime on UMAC is flagged as volatile with 67% confidence. That's the honest answer. The Bollinger Band width is elevated. The ADX trend strength indicator is low, which means the stock isn't trending hard in either direction right now. It is in a consolidation pattern. Labrador, the technical precision model, specifically notes MACD bearish pressure and recommends waiting for a crossover before entering. We're already in, which means we are in the window where patience is not passive. Patience is the trade. Now JFB Construction Holdings is at $5.25 as of this analysis. We entered at $5.57, down about 6%. The AI tells a more nuanced story here, and we want to walk through it carefully. The consensus signal is buy, but the confidence number is 43.9%, and the model flags this explicitly as a low confidence consensus with mixed signal agreement. That is honest data. What makes it still worth paying attention to is the model agreement, 79%. 3 of 4 models are aligned on direction, even if the confidence on each is lower than we'd like. There's also a transparency flag worth mentioning on JFB specifically. The machine learning model was trained on 62 days of price history. Hound Trader's ideal is over 100 days. JFB is a newer listing, which means the model has less to work with. The signal is directionally useful, but we are holding it with appropriate weight, not gospel, not noise. What the models do agree on is this: Bulldog holds for risk management, Labrador buys but wants a MASCD crossover before adding, Greyhound sees volatility opportunity, and St. Bernard, the fundamental value model, flags excellent risk-adjusted returns and recommends a long-term holding strategy. The Sharpe ratio on JFB is sitting at 1.97. That is a strong number. It means the return per unit of risk this model sees on JFB is actually quite good. The catalyst we bought JFB for has not happened yet. The merger timeline with XTEND, the move into AI robotics and drone infrastructure, is still live. Event-driven plays do not resolve in 2 weeks. That is not how they work. Selling before the event, after entering a position sized for exactly this kind of volatility, would not be risk management. It would be noise management. Those are different things. How I got into JFB and drones in general was a social story from Capitol Hill. Then I heard about this massive merger with XTEND that turned it into what's going to be XTEND AI Robotics on Nasdaq. Over the last year or so, I've been shifting more into deep research on small cap and special situation plays, especially anything tied to defense, AI, and real American manufacturing. One of the stocks that caught my eye was JFB Construction Holdings. At the time, it was a Nasdaq-listed company in real estate development and construction. I liked the US-based operations and the infrastructure angle, but what really made me pull the trigger was when they announced this transformative $1.5 billion all-stock business combination with XTEND back in February 2026. XTEND is an Israeli-founded but now US-focused defense tech company. They've built a battle-proven AI-powered operating system called XOS that runs autonomous drones and robotics. These aren't just fancy toys. They're being used in real defense and public safety scenarios. What made this merger stand out to me? It combines XTEND's cutting-edge AI robotics with JFB's established US operating platform and infrastructure expertise. The combined company will be renamed XTEND AI Robotics and list under the new ticker XTND. It's backed by some high-profile strategic investors including Eric Trump, Unusual Machines, UMAC, you can tell is on my list to watch and what I'm buying, and several other funds. They've got a growing pipeline, existing backlog, and this deal helps them scale NDAA-compliant manufacturing right here in the US. The future's autonomous systems and drone technology are exploding in importance for national security. This positions them to become a real US leader in the sector. For me, it checked a lot of boxes: strong tech moat, government tailwinds, and a clear path to becoming a bigger public company. Of course, it's not without risks. These mergers can take time, expected close is mid-2026. And there's execution risk, regulatory hurdles, and the usual defense contracting volatility. But I'm comfortable with the position size, and I'm in it for the long haul. This deal is one of the reasons I love investing, finding companies at the intersection of innovation and real-world needs. If you're interested in defense tech or SPAC-style mergers, paper trade along with me and see how you do. What do you think? Bullish on autonomous defense robotics? Drop your thoughts below, happy to discuss. Also, why I haven't leveraged my cash? Well, the $13,792 in cash is still sitting. That is not a failure, that is discipline. The right setup for deploying that capital hasn't shown up yet. When it does, it will go to work. Until then, cash earns its keep by not becoming a bad trade and being available to buy when I need it. What is being watched going into Week 3? The MACD crossover on both UMAC and JFB. Looking at the hounds and the hound trader, the Labrador's recommendation resolves. If the technical picture starts to confirm what the fundamental models are already seeing, that is the signal worth acting on, not the red number on a 2-week-old position. The AI is a tool. It doesn't feel regret about a 15% drawdown. It doesn't panic. It runs the numbers and tells you what it sees. Right now, it sees opportunity in both of these names. The job is to hold the process while the market catches up to the thesis. Set up your own paper portfolio and run the same analysis through Hound Trader or your favorite paper trading platform. I want to see what you are buying. Put JFB and UMAC in, run the advanced analysis, see what your models say, and then let's compare notes next week. We're not quite at week 2, but I felt excited to share what I am looking at with regards to drones. We're down $3,500 on 100,000. The AI still says buy. We're watching the crossover. Dumb money, smart moves. The 100K experiment continues.